If you ever want to be a profitable trader, then these are the 5 price action rules that you should know. Number 1. Only trade with the trend. This really goes without saying, but if price is breaking lows and showing that it's consistently bearish, you should only look to trade bearish, and vice versa. If price is breaking highs and consistently showing that it's breaking highs, you should only look to trade bullish. Do not trade against the trend. This goes hand in hand with the last price action rule. If price action is showing you that it's bearish, why would you try to trade the opposite of what it's showing you? All you're doing is fighting against the market and asking to get jumped. So trust me, don't do it. Higher time frames are key. If you ever took a trade thinking that you were going to win and then it completely fails, it's probably because the higher time frame was showing something else. The higher time frames will always be higher probability. High risk to reward is not necessary. This one's pretty self-explanatory, but just know that you only need a 1 to 2 risk to reward at a minimum and you'll be fine. Never move your stop loss. Always stick to your strategy, and whenever you place a trade, never move your stop loss. Once you place a trade, that's it, and you let the markets do what they're going to do. Otherwise, this will just mess up your psychology, so think of it when you place a trade that it's final, and the only thing that you can do is manage the trade. Do not be attached emotionally, and you should not care whether it's a win or a loss. These were the 5 price action rules every trader should know.